Welcome to the Coin Bureau Weekly Crypto Review. Here are this week's top headlines in the crypto news. Tech giant turns 180. Google reverses its ban on cryptocurrency advertisements. What this could mean for the crypto market. Apple versus Alphabet. Steve Wozniak loses lawsuit against YouTube over cryptocurrency scams. Will these scams ever stop? Disturbing definitions. The DOJ has announced that it will treat ransomware attacks as terrorism. The implications this could have for cryptocurrency. Ethereum everywhere. Institutions are buying it, Norton will let you mine it, and the Anchorage Bank begins offering Ethereum-backed loans. Is the flippening here? Domo arigato, Mr. Roboto. An SEC-sanctioned automatic crypto investment app comes to life. How this curious creation confirms cryptocurrency ETFs are closer than we think. Is the Doge father doomed? Elon Musk gets a warning from Anonymous. What they said and what could come next. Miami Crypto Madness. A quick recap of the Miami Bitcoin meetup. Who attended, what happened, and why this event is so significant. Solana in the sun. A new NFT marketplace lands on cryptocurrency's fastest blockchain while the team discreetly raises hundreds of millions of dollars to take on Ethereum. Will it be enough? And of course, your weekly crypto market update and forecast. All this and more in just a moment. Good morning, afternoon, or evening. Thank you for tuning in. My name is Guy, and what you're about to see is educational content, not financial advice. You can find any topics you're looking for using the timestamps in the video timeline. And now for today's top stories. Google has said that it will be reversing its ban on cryptocurrency advertisements for US users in a surprise announcement. Google's crypto advertising ban was initially put in place in 2018 on the grounds that it had, quote, seen enough consumer harm or potential for consumer harm related to crypto investing. Starting from August 2021, any cryptocurrency exchanges or wallets that hold a banking license or are registered with FinCEN will be able to advertise their services to US users of Google's platforms. Google's blog post about the change also stresses that any ads related to ICOs or cryptocurrency investing will not be permitted under any circumstances. This includes advertisements by decentralized exchanges and applications, which is a big bummer in my book. Given these conditions, there are only a handful of crypto-related companies that qualify, such as stablecoin issuers like Paxos and Circle, registered exchanges like Coinbase and Kraken, and a handful of crypto banks such as Anchorage. Many are speculating that the reintroduction of crypto ads will supercharge the growth of the crypto market, since many active investors live in the United States. Those of you living outside the US will know that companies like Crypto.com have been advertising aggressively, and these advertisements have played a big role in onboarding new users. Now imagine that effect, plus the trillions of dollars of stimulus money sitting in US bank accounts. Pretty bullish, isn't it? Google's U-turn on crypto ads comes as the tech giant successfully quashes a lawsuit by Apple co-founder Steve Wozniak and 18 others who have been featured in crypto giveaway scam streams here on YouTube. As you might have guessed, this was because Google is protected under Section 230 of the Communications Decency Act, a controversial law which gives immunity to tech giants for what their users publish on their platforms, while simultaneously allowing them to censor user content. Steve & Co. argued that Google was complicit in the cryptocurrency scams on YouTube, as some of the scammers had paid for ad space to make sure the streams would be seen. Steve also noted that many of the YouTube channels running the scams had been verified by YouTube, and this claim could be a contributing factor to why the lawsuit was unsuccessful. This is because many of the channels that run these free crypto giveaway scam streams are actually legit. What happens is that the scammer hacks into a popular YouTube account, changes all of the information to match the scam in question, deletes or hides all existing content, and then runs the scam stream. This method means that there really isn't much that Google or YouTube can do to stop these sort of crypto scams, and they are likely to continue happening. You can learn more about common cryptocurrency scams and how to protect yourself from them by watching my video about that. It's in the description if you need it. Another type of crypto-related crime that's unlikely to stop anytime soon is ransomware attacks. This is when an attacker shuts down or restricts access to critical computer systems and demands payment in cryptocurrency from the affected individual or institution to restore their operations. The US Department of Justice has announced that it will be treating ransomware attacks like terrorist attacks. This is a problem because the cryptocurrency of choice for these ransomware attacks is Bitcoin, and some politicians in the US are arguing that the presence of this payment method encourages them. Now, the narrative that cryptocurrencies need to be banned because of their use in illicit activities is not a new one, but it's one that has come to the forefront given that ransomware attacks are up 3x over the past year. The funny thing is that most illicit activity involves regular fiat currencies, namely the US dollar. More importantly, because all Bitcoin transactions are public, this makes BTC a less than ideal currency for criminal activity. In fact, it could be argued that Bitcoin is the easiest currency for authorities to trace. This is why criminals will immediately try and swap their Bitcoin for privacy coins such as Monero, which do provide the level of anonymity they need to evade law enforcement. Thankfully, these concerns haven't had any visible effect on the adoption of cryptocurrencies, and Ethereum seems to have taken the lead on this front. If you've been paying any attention to whale tracking tools like Whale Alert, you've probably noticed that large amounts of Ethereum were bought up last week. The suspected buyers behind these large transactions are institutions, which seem to be cozying up to crypto's second largest coin. It's not just institutional investors either. Norton 360, one of the most popular antivirus software and VPN providers in the United States, has announced that it will support Ethereum mining on its software, which comes pre-installed on millions of computers in the US. According to The Verge, Norton also plans on supporting mining for other, quote, reputable cryptocurrencies in the coming weeks. It's questionable how profitable this kind of Ethereum mining will be, since most proof-of-work cryptocurrencies require specialized computers called ASICs to earn a meaningful amount of coin. What's even more questionable is Norton's handling of cryptocurrency mined by its users, which will apparently be held in Norton's own corporate crypto wallet. In other words, the crypto won't actually be held by the people mining it, and it appears they won't be able to transfer that crypto to any other external wallet addresses either. That said, Norton specified that it will be possible to withdraw any mined cryptocurrencies via Coinbase, where they can be cashed out. Speaking of cashing out, crypto bank Anchorage Digital has rolled out a fiat lending service that lets institutional clients use Ethereum as collateral. Anchorage already provides the same crypto collateral loan service with Bitcoin and even gives institutions the ability to stake cryptocurrencies, including ETH. Ethereum's dominance has been in a visible uptrend for months now, and at this rate, it's possible we could see ETH flip BTC within the next year or two. It's only a matter of time before we see ETFs for Bitcoin and Ethereum, and the recent release of a robotic crypto advisor app seems to confirm they're coming. Makara is an SEC-sanctioned mobile app that creates a cryptocurrency portfolio depending on an investor's goals, interests, and risk tolerance. Makara also automatically trades crypto on its users' behalf and stores all their cryptocurrencies with Gemini Exchange's crypto custody service. Makara is basically an all-in-one cryptocurrency investment vehicle that's catering to the sorts of investors that are waiting to buy cryptocurrency ETFs. Now, this has led some to believe that Makara's green light from the SEC suggests similar actions are in order for ETFs currently being reviewed, especially since some of them are using Gemini for crypto custody. I covered those in last week's cryptocurrency news review, which you can watch using that link in the top right. Now, I did my best to leave Elon Musk out of this week's cryptocurrency news review, but there's no ignoring the cryptic video Anonymous made for the Techno King just a few days ago. In case you didn't know, Anonymous is an organization consisting of hundreds and possibly thousands of hackers around the world. Since 2003, Anonymous has launched hundreds of cyber attacks against individuals, corporations, and governments that they believe have caused harm to the average person. Elon Musk is the latest target of their coordinated campaign, and in a 4-minute video, they detailed the hypocrisy of Elon's behavior and comments regarding a number of topics, notably the environment and cryptocurrencies. They highlighted the fact that Tesla's production of lithium batteries does serious damage to the environment, and that Tesla makes most of its income from selling carbon credits given to it by US regulators. Anonymous also raised the same concerns that I did last week about the formation of the Bitcoin Mining Council, which Elon facilitated, specifically its potential to centralize Bitcoin mining. While the video did not detail exactly what actions Anonymous plans to take against Elon, their historical activities suggest they will find and leak sensitive information about him, Tesla, and/or SpaceX. I'll leave the full video of the message in the description if you're interested, and feel free to drop me a comment about what you think Anonymous will do with the Dogefather. Meanwhile, in Miami, over 60,000 people, including MicroStrategy CEO Michael Saylor, Twitter CEO Jack Dorsey, and even skateboarding legend Tony Hawk, came together for the largest ever annual Bitcoin conference. Pro-crypto Miami Mayor Francis Suarez opened the event on Friday with a speech where he said that the days of central banking are coming to an end. Michael Saylor revealed that it had been almost exactly 1 year since he bought his first Bitcoin, and Jack Dorsey contemplated internet currencies while being heckled over Twitter's censorship practices. Saturday's speakers included Galaxy Digital CEO Mike Novogratz, who reminded everyone that Bitcoin is the most held asset besides the US dollar, and Prime Minister of El Salvador Nayib Bukele, who dropped a massive Bitcoin bombshell. As part of a presentation by the founder of the Strike Bitcoin Lightning Network wallet, a pre-recorded message by Nayib revealed he is tabling a bill to make Bitcoin legal tender in his country. Now, many are calling the announcement one of the most historic moments in cryptocurrency, and it's quite possible that other nations will follow suit if the bill is passed. My only concern is whether Bitcoin will be able to scale enough, even with the Lightning Network. As I mentioned in my recent video about the fastest cryptocurrencies, Solana is the only crypto that's currently capable of handling throughput comparable to payment processors like Visa and MasterCard. In addition to launching an NFT marketplace, Solana is apparently looking to raise nearly $500 million to take on Ethereum as the top smart contract cryptocurrency. If successful, it would be the largest funding round ever for any cryptocurrency. The current record holder in that category is USDC's Circle, which raised $440 million a couple of weeks ago. Other cryptocurrency projects, such as the Internet Computer, have also been raising hundreds of millions of dollars to move up the crypto ranks, but few, if any, have been successful. This is primarily because there is a chronic shortage of developers in the cryptocurrency space, and most of them are familiar with Solidity and other coding languages used on Ethereum. Ethereum killers also lack network effects and adoption, but this seems to be changing for Solana. Solana has been in the spotlight ever since the FTX cryptocurrency exchange chose Solana to host its Serum DEX, an order book-based decentralized exchange that seeks to outperform centralized exchanges. Solana has also been one of the top-performing cryptocurrencies in recent weeks, despite the market downturn. Now, you can learn more about Solana by watching my video about it. The link is in the description. Turning to the crypto market, we can see that Bitcoin is continuing the sideways price action that began after that sharp crash in mid-May. Those of you who watched my video about the Wyckoff method will remember that this price action is characteristic of Wyckoff's accumulation pattern. This means Bitcoin will probably continue to bounce between 32K and 40K for the next week, though we could temporarily fall below or rally outside of that zone. This week's winners are Theta and its T-Fuel token, Curve Finance, Solana, and Kusama. Theta's and T-Fuel's price pumps are being caused by a bunch of announcements related to the upcoming launch of Theta 3.0, which will introduce T-Fuel staking and burning as well as NFTs to its decentralized video streaming protocol. Theta also recently introduced one-click delegated staking through the Theta web wallet browser extension. Now, I'll leave a link to my latest update about Theta if you want to learn about it. As you can see here, Theta seems to have hit some price resistance during its recent rally. It's a far cry from its previous high, and I think retesting those levels is going to take some time. T-Fuel also got rejected at a key resistance level, but seems to be poised for another massive pump. Not financial advice, but keep your eyes peeled on this one this week. Curve Finance's CRV token continues to impress despite its terrible tokenomics, and that's because Curve Finance has announced that it will be launching on Polygon, Ethereum's go-to Layer 2. Curve Finance has also been revealing some super bullish statistics, such as the fact that its stablecoin protocol is the second largest holder of stablecoins, with Binance being the top dollar dog. Now, before you ape into CRV, remember that it has a very aggressive inflation schedule, and this is reflected in its price action, which has been relatively flat ever since it started trading. I've already covered the likely culprits behind Solana's price action, so I'll just point out that Sol continues to be in a visible uptrend towards a strong zone of resistance around the $44 to $45 range. As for Kusama, its parachain slot auctions should be beginning at any second now that the parachain that's used to mint tokens has gone live. While I think it's very likely that these parachain slot auctions have already been priced in, it's also very possible that KSM will be blasting off to the high 500s, since it's painting a bull flag on the daily chart. You can learn more about Kusama's parachain slot auctions by watching my video about them using that link up there in the top right. And that is all for today's Coin Bureau Weekly Crypto Review. If you enjoyed it, you know what to do. Hit that like button, subscribe button, and bell icon too. If you want more of me, head on over to Twitter, TikTok, and Instagram to get a sneak peek behind the scenes. If you join my Telegram channel, you'll get the daily crypto updates you crave, and signing up for my weekly newsletter is a great way to get the tools, tips, and tricks you need to get paid. And of course, you can support the channel by heading over to the Coin Bureau merch store and picking up a shirt or hoodie, or hey, both. Links to all these resources are in the description. Thank you so much for watching, and I'll see you all very soon.